Thank you for joining Don Getling and Gino Franti on the National Real Estate Cafe. The best place to get a hold of us is nrecafe.com, so make sure to check out our website and also text us to receive these dailies. Text NREC to the number 58885.
All right, thank you very much, Gino. All right, so we're going to stay on the same thing. We were kind of giving an idea. We jumped off my drum, which was jobs, because jobs has a lot to do with, bless you, has a lot to do with the economy and how well we're doing. And the job's been pretty consistent. And we're going to go over some numbers that are really important because, again, this media loves to spin things, and the manufacturing sectors have been slowing down a little bit, and everybody's getting nervous about that. So let's go to this first screen here. And here's where the jobs are. Now, our job report missed a little bit, huh, Gino?
Missed a lot. I mean, we were looking for, the market was looking for 200,000 new non-farm payroll jobs to be added to the economy, and we only got 151. So to put it in perspective, that doesn't sound like a huge miss, but that means 25% of the jobs we were looking for didn't happen.
Yes, and you see the number was a lot further down. Pop that screen up one more time. You'll see that November and December are pretty strong, but that is pretty cyclical. During the holidays, we always add on a lot of part-time jobs. This doesn't say whether it's full-time or not, so we had a lot of jobs added on. January, we dropped off a little bit.
Well, non-farm also includes retail, Don, so you're right. It does have definitely a seasonal aspect to it, but regardless, not a great jobs number. Now, on the contrary, on the flip side of this, let's go to the next slide.
Here we go. Where are the jobs coming from? And Gino, you've hit the nail on the head on this one. I really like the fact that you said, hey, you're going to hear about manufacturing slowing down lately. And you go, but we're service-oriented. Isn't that what you said?
Yeah, it is. So the reality is that we haven't been a manufacturing or industrial country since World War II. I mean, we're moving in a whole different direction on what our country's GDP consists of. Now, the interesting thing is on the right side of this slide, you'll see that beautiful unemployment rate, Don. And that, for the first time, I've now heard the media talking about full employment. But you don't think that's true, do you?
No, well, not really. We're going to show you another little chart that explains why that number has been coming down. So let's look at this next one. I know you already know where we're going. Participation levels. That's right. We're in one of the lowest participation levels in quite some time. That has a lot to do with a lot of the baby boomers basically saying, I'm out. Or if you lost your job, it's hard to get back where you were. Meaning if you were making, just for round numbers, 80,000, your company downsizes, it's almost impossible to jump right back in another 80,000. You can almost start from the bottom and work your way up. And a lot of you out there went, no, thank you.
Yeah, so here's a couple of things that are happening, right? And I don't want to get super ultra political here, but there's a couple of things. One is, people have been able to retire and maintain a certain level. So they said, forget it. Like you said, forget it. I'm out. I'm not going back. They didn't have to. Right. So social services are good enough that they didn't have to. Or inflation has also been low enough that social services are good enough, right?
And then their stocks have done pretty well too.
That's right. Some people have invested correctly or done very well over the boomers have done very, very well over the last 50, 60 years. So there's a good reason why participation is low. Here's another one.
I know where you're going.
I don't know. I'm not entirely sure that everybody wants a job, and we might just be in the gap before millennials fill it.
There you go. Okay. All right, one more chart here. Oh, I think that was it.
That was it, Don. Oh, you were going to talk a little bit about earnings.
Earnings. So if you look at this chart, the average earnings now is up to 25.39 per hour, and at 34.6 hours a week on average. I wish. That's usually Gino and I between Monday and Tuesday.
That's like part-time.
Yeah. That equates to over $45,000 a year. And the average wage increased 2.5% last year, which is just a tad over inflation because inflation has stayed below 2%.
So this is for another show, another day, but we're going to talk a little bit about technology and why minimum wage is putting pressure on major companies to go ahead and let go of people for technology. So we'll talk a little bit about, we could do a whole show on that.
Yeah, what was your saying?
That never bet against the American entrepreneur.
All right, you heard it right here on the National Real Estate Cafe with Don Getling and Gino Franti. Tune in daily to see what's brewing.